On this hot sheet, we have the weekly inventory update, how many new builds make up our inventory, and what institutional buyers might do to the current housing inventory. Today is Monday, August 21st, 2023. I am Byron Lazine, and the hot sheet starts now. Good morning here on this Monday, live from Dallas, Texas, as we get ready for the Tom Ferry Summit. Let me know in the live chat which market you're tuning in from, and if you're going to be joining me here in Dallas for the Tom Ferry Summit. In fact, Bam Bash is tomorrow night, and I can see the location right out that window where we will be hosting Bam Bash. Welcome to this is our little Dallas, Texas studio for the week. I will not disclose the hotel. Bobby, should I disclose the hotel that we're at? Not no, maybe but we'll be going to that hotel tomorrow night for the Bam Bash. If you're getting your last minute ticket, there's a link down below where you can come here in person. And of course, let me know if you're coming to the Bam Bash so that you get in. Bam X members, of course, you guys are getting in. There will be some people that probably won't get in just based off of the capacity, but all Bam X members are. Use 10% or use code HOT to get 10% off of BAMX. All right, we've got a big weekly market inventory update using the housing market tracker on Housing Wire. Logan Motoshami puts it out using Altos Research each and every single week. We're hoping for more inventory, and weekly active listings did rise by 4,401 for the past 7 days. Now, interestingly enough, that's bigger than the increase we experienced the same week last year. That hasn't happened in quite some time. So last year, from August 12th to August 19th, inventory rose from 550,175 to 551,000 rather, 458. Okay, so that's only a just over 1,000 increase last year, where this year we get over a 4,000 weekly inventory increase. Of course, our numbers that we're dealing with are a little smaller, 492 to 496,000. The inventory bottom last year was 240,000. That's the all-time low ever for total active inventory. Our inventory peak right now in 2023 is right now 496,541. Active listings for 2015, a much normal market, were over 1.2 million for this week. So we're negative year over year on inventory as we sit here right now. But all year, when you look at the entirety of the year, remember last year, which makes it a little hard to compare 22 to 21. Last year, we saw that we were well below active listings at any point that were this year. I mean, look at where we bottomed last year, and here was our bottom, April and May of this year. So negative right now, we have been for the last few months, as we just can't get the new listings. Now we are tracking to have a year where we have the lowest ever new listings recorded since they've been tracking this. This is looking at Altos data. And this is just the last 3 years, but 2023, we have been below the line for new listings coming onto the market for this week, same week in the past years. This week, 60,000 new listings. Last year, it was 68,000 new listings. And in 2021, just over 80,000 new listings. Okay, so still struggling in the inventory department. We're all hoping for some type of change there. And what could change that? We'll get into that here in just a second. What could change inventory, but who's it benefiting the most right now would certainly be builders. We talked about this last week on some of the streams. There's a piece out right now on nowbam.com. New builds make up 1/3 of inventory. Okay, a new Redfin report shows that nearly 1/3, 31.4% of homes for sale are new construction. That's up from 30.3% a year earlier, and almost double the 17% from Q2 of 2019. Builders with leftover inventory are lowering prices and offering concessions to entice buyers and offload supply. That feels to me, so the builder sentiment came out last week and it dropped down to 50. Anything below 50 is builders don't feel good about the market. Anything above 50 is they do feel good about the market essentially. And it's at 50. So it's locked in the middle. So I think the builders that are like, okay, let's lower prices, let's push. They might be in a market that isn't doing as well as some other markets, and that they're just like they're on that lower 50 side about their feelings. And then there are buyers out there that aren't lowering a price at all. They're just using the rate buy down that they have to their advantage to do more deals. So it's almost a full third of single family homes on the market right now are new builds. This is maybe why Warren Buffett made the big bet on new construction on the three companies that he chose to invest in last week. We did a hot sheet on that because and I said this last week. I ultimately believe Buffett made that bet because he doesn't see where any other inventory is going to come for single family homes. He believes that this power position that builders find themselves in, being making up a third of the market, untraditional for the for sale market because of how low inventory is. We just went over those numbers, right? We've got historic low new listings. We've got relatively historic low total active listings, aside from last year's March. That he believes that they're going to have this position here for the long term. Why else would he make a bet on three national home builders at their near all-time high stock trade? Okay, so just a year ago was the same case. New construction accounted for 30.3% of single family inventory, but it's typically about half of that. Okay, so here's the chart. All of our downloads are in BAMX. You can get all of the Hot Sheet daily downloads in one place. If you're a BAMX member, use code HOT to get 10% off if you're not a BAMX member yet. And you can see here the acceleration of new construction for sale homes, share of U.S. single family homes in the market that were newly built. And this goes back here all the way to the year 2000, this chart that you're seeing. Like in quarter two, 2000, the market was 14.4. The share of new construction was 14.4% in the year 2000. In 2011, the market share was 5.8%. We know builders, for a couple of years before that, they had packed up their brown paper bag lunches and their tool belts, and they went home. They said, we're not doing this. We're not, this is the worst market we've ever gone through, and we're done for a little bit. It took all the way until 2019 to get back to 16.7%. And in the last 23 years, we haven't seen anything like we're experiencing right now. Quarter one and 22, when we saw the lowest, active, inventory levels of all time, we're talking about 34.5%. Quarter two of 2023, when we're still at ridiculously low active inventory levels, 31.4%. So when we talk about the interest rates being higher for longer, we might also be talking about inventory being lower for longer, which is going to inflate the total percentage that new construction makes up of the market. All right. Home LLC, sourcing Redfin, put out a piece or a graph on Twitter. I want to share this with you, and I'll have it below in the daily download to show them. Often it's like, where are the biggest new construction? Where is it happening? Well, according to Redfin's data, metros by new construction as a percent of total sales, El Paso would be in the lead. El Paso has a whole bunch of it. Omaha, Nebraska in number 2, Raleigh, North Carolina, Oklahoma City in number 4. Okay, Boise number 5. Boise's a really market that got overheated. So there's still got inventory coming online. Houston, Texas, Richmond, Virginia. There's a little song. Did you see that song about Richmond, Virginia? Anybody in the comments see that song about Richmond, Virginia? I don't know. Is that a controversial song? I thought it was. A guy from his backyard went to number 1. Very interesting. Nashville, Tennessee, Greenville, South Carolina, Charleston, South Carolina, Tulsa, Oklahoma, San Antonio, Texas, Minneapolis, Minnesota. So before you get to Minneapolis, that feels like a lot of Sun Belt states in there. That's where the majority of the new construction is happening. Then you've got Austin, Lakeland, Florida, McAllen, Texas, Dallas, Texas. Thank you very much. Thank you very much. Where we sit here today on your hot sheet. Okay. I'm not going to go through them all, but that is down below for you, or it's actually in BAMX if you're a BAMX member. The low end of new construction would be New York, Detroit, Oxnard, California, San Diego, California, Pittsburgh, Pennsylvania. You got New Haven, Connecticut down there. I know, for example, Connecticut as a state only puts 2,000 new units online per year. You've got Bridgeport, Connecticut down there, Buffalo, New York. Yeah, I can't imagine a new construction boom in Buffalo. Sorry to all you Bills fans out there. I know football season's starting and the Bills Mafia. I want you guys coming after me. But yeah, I didn't think of okay, new construction places and think Buffalo, New York. Just not coming top of mind. Okay. New construction accounts for near record for sale of inventory. Uh, Builders are now trying to capitalize on this moment where they may have, center stage here for quite some time when we're dealing with these low inventory levels. Total inventory fell 15% year over year in June. Total inventory falling to an all-time low. Now, this is Redfin. I still have active inventory. That's total inventory NARS number where you got the pendings, okay? Because pendings have dropped. But when you go active inventory, that was actually quarter one of last year. Okay, so there you go. That's why the builders have center stage. Now, there's this theme out there that the inventory is going to go up because all of a sudden Wall Street and institutional investors are going to dump all this inventory onto the market, capitalize on high prices, and flood the housing market with inventory. You've seen the Airbnb bust talk, which Logan Motoshami from Housing Wire debunked that pretty quickly with just one tweet. It was like a destruction tweet. You don't know what you're talking about. He says, okay, there's 144 million housing units across the US, and less than 1% of those are Airbnbs. So let's just say 100% of the Airbnbs came on the market, which would, by the way, never happen. Okay, so 144 million. What is that? If even if it was 1%, okay, that's 14,000 homes. We got what do we get? 4,000 new listings this week, and it did, or increase in active listings, it did absolutely nothing. Has anybody felt that bump? You're never going to see 100% of Airbnb homes come onto the market. This is ludicrous to think. And anyways, that Airbnb aside, let's get into the Wall Street and the institutional buyers. Lance Lambert put a piece onto Fortune here, talking about why the pandemic housing boom. The obvious that yes, there was an uptick in Airbnb hosts, mom and pop landlords, institutional buyers taking advantage as they should have, as home buyers should have. The ones that weren't listening to people like Reventure on YouTube, they should have been buying in 20 and 21, taking advantage of the low mortgage rates. Okay. Invitation Homes was one of those. Invitation Homes currently owns 82,837 US single family homes. What would that be? 82,837. Okay. 82,837, 144 million. What does 100, what did I say? 144 million? 144 million. Let's take the 82,837. Stay with me here. I didn't barely graduated high school. 144 million. There's three commas in a 100 million. Probably two commas. Two commas technically, I guess. All right. That is Invitation Homes, for example, owns 0.00057526% of US homes. I mean, they own nothing. They own 82,000 homes. Okay. So they were a net buyer of only 1,500 homes in quarter three of 2021, while American Homes for Rent, which owns 58,693 US single family homes, even less, net buyer of 1,200 homes in quarter three of 2021. So a lot of people think Wall Street's buying all the homes. Not the case. I've got some charts to show that. According to John Burns and Consulting, institutional homes or firms rather also bought 90% fewer homes in quarter one 2023 as compared to 2022. So we just went over the numbers of 2022. They were buying all the homes, which is totally not the case. Okay. And then in this quarter one of 2023, they bought 90% less. In fact, Invitation Homes was a net seller, negative 205 homes. American Homes for Rent, net seller, minus 300 homes in quarter one of 2023. Yield Street, which owns around 700 homes. Way to go, Yield Street. I know some local investors that own about that. They haven't bought a single family home in 2023 through July yet. Okay. So this is where they sit today, these single family institutional home buyers. Okay. John Burns, can we see that chart? Yeah. Okay. Investor home purchases by size of investor. Okay. US national quarter two through 2000 through quarter two of 2023. This is what's happened this year. Okay. iBuyers have accounted for just over 3,000 sales. Total purchases quarter two, iBuyer 0.5%. This is just the investor purchases. Isn't the when I say 0.5%, that's not the entire market. Tier four investors that have 1,000 plus properties, they accounted for about 2,000 sales, just under. Tier three investors, so they've got 100 to 999 properties, they accounted for 4,692 sales. Tier two investors, 10 to 99 properties, 16,928. The bulk of investor purchases are coming from tier one investors, your mom and pop, your neighbor next door who's trying to pad her retirement. 1 to 9 properties, 125,006 sales. Okay. That's where the investments are coming from. This is a fantastic chart here by John Burns Consulting. It'll be available for you in the daily download in BAMX. Use code HOT to get 10% off of that. The overall investor share of the purchase market is upwards around 25 to 30%. Okay, it bounces. You can see it bouncing around. This has been happening since the year 2000. Overall investor share of the purchase market. Okay, but most of it's individual investors and has been since the year 2000. If you look at individual investors, we've bounced between anywhere from 15 to over, I say we, because hey, get in the game, folks. Be an individual investor, between 15 and up over 20% for individual investors. Then you've got small investors making up about 5%. Mid-size investors are on the list here. And then second home buyers. This is where the majority of investment purchases are going, not Wall Street, not institutional buyers. Okay. Large corporate buyer share of the purchase market. Here's where it is. Institutional buyers in the last year, they have been a buyer of about 2.5% of the purchase market. Okay. There's many years here where it was down by 0.5%. They've been a 2% buyer back in 2012 and 2013. They're not always a 2% buyer of the market, where you're like, well, if they buy 2% of homes every year and compound that out how many years, eventually they're going to have X amount. No, they're not always a 2% buyer. Look at the chart. Where have they been a 2% buyer? Oh, the greatest opportunity of all time to buy homes. And oh, the lowest 30-year fixed mortgage interest, the cheapest money of all time. This is when large corporate buyers have been aggressive. The rest of the time, we're talking about 0.5%, 1%. There's some pops there. They're probably playing. They're probably playing the interest rate game a little bit there. And then you do have, I'll go back to this, you do have iBuyers, which have ticked up to about 2% in the last couple of years here. And we know that they've basically pulled all the way back, right? If we're going to try to scale flipping, and there's always been flipping, you know, being a percentage of the market. We buy houses, black and yellow signs on the telephone poles. It's always been there. But if you're going to be an aggressive flipper, you better be, you better know what you're doing. Basically, you better be pretty local to that market. That's been one of the struggles with these home buyers. So here's another number to put into context for you. Between 2011 and 2017, some of the world's largest private equity groups and hedge funds, as well as other large investors, spent a combined 36 billion on more than 200 homes in ailing markets across the country. Man, they bought 200,000 homes for 36 billion between 2011 and 2017. Okay. Update for you. I've got a number that basically puts that number to shame, unfortunately. Okay. For everybody that's like, they're buying all the homes. There was, 125 million purchases during that time. Okay. They accounted for 200,000. Let me just make sure that number is correct. Okay. Because that one just came out of the top of my head. I'm sorry. It wasn't 125 million because that did sound really high. Just knowing the numbers, it was 35 million homes were bought during this process. So 200,000 to 35 million. I don't know where the 125 million came from. I apologize. That's why I got the data in front of me so we can have it accurate. So over 35 million homes were bought during this process of 2011 to 2017. 200,000 went to those scary hedge funds. They're not stealing the properties from Bobby, the producer. It's just not happening. Bobby's friends and his aunts and uncles are stealing the property from Bobby, the producer that wants to go out and buy his first home. And the lack of inventory and all the other things that we've discussed here. All right, the 30-year fixed mortgage came in for last Friday, the same as we ended Thursday with. So we stuck at a 7.37 number on Mortgage News Daily's daily survey. That is tied with the single day peak of 2022, which happened, I think, in October, November timeframe. We're sitting basically tied for the highest level since December of 2000, so 22 plus years. We haven't been at this level for the 30-year fix. Even the Freddie Mac 30-year fix weekly. Some people are like, don't use the daily survey, use the Freddie Mac weekly. Even the Freddie Mac weekly's at 7.09. They're called weekly for a reason because they're a week behind. I like the daily because the daily's up to the minute. Okay. I mean, if there was a minute survey, I would go off of that. But there you go. The 10 years not helping us out today, up around 4.3. And I would expect that we probably set a new peak today on the 30-year fixed. Of course, we're going to be able to wash those sorrows away at the Bam Bash tomorrow night. I'm pointing over here because just out that window is where we're hosting the Bam Bash. We're going to have a great time. So if you're coming out to Dallas, make sure you come to the Bam Bash. If you're BAMX member, you automatically get in. You get 10% off of BAMX by using the code HOT down below. And there's still a last minute link to get your lowest price on the Tom Ferry Summit if you are coming out here down below. Hope everybody has a great Monday. Be super productive. We'll see you back here tomorrow on the Hot Sheet live from Dallas. Until then, toodaloo.